we'll go on to parametric insurance now that we've got a little bit of background. So the first thing I like to think about with the fundamentals of parametric insurance is I like to think of it as pre-agreed insurance. We pre-agree an event happening, and if that event happens, then we make a pre-agreed payout. So to me, parametric insurance is all about pre-agreeing and agreeing up front. If this happens, then the insured will be paid out this. Rather than with traditional insurance where you have a loss and then you have to work out how much is that loss and how much is owed and how the policy reacts. So we're trying to take out all that complexity and agreeing it all up front. And the importance of parametric insurance is making sure that we pick a very reliable and independent trigger that can't be manipulated by anyone. You want transparency around that trigger. And this is where parametric insurance tends to be more geared towards weather-related risks or using weather as a trigger. Because one, it's accessible, it's always measured, it's independent, it can't be influenced by the insured or the insurer. And this is where that goes towards. The beauty about parametric insurance is all about the quick speed to payout as well. Because once the triggers occur, then the payout can happen straight away. We don't need to go through a complex claims process. So the main thing around parametric insurance, the big piece about the structuring is all about making sure we pick the right triggers and the indexes. Because it's all pre-agreed up front, what could happen is the event that occurs that we've decided, say an earthquake, and we've agreed a specific payout, it might not match the actual loss that the client or the insured has suffered from that event. And from the payout not matching the actual loss occurred, the difference between that is something we call basis risk. Because there is a point where we will not pay all the way up to their actual loss because we didn't agree that up front. So in traditional insurance, typically, you'll be made whole as you were before the loss occurred. With parametric insurance, you'll just get whatever we agreed the amount to be. So we normally say parametric insurance works very well with traditional insurance because with parametric insurance, you'll get paid very quickly, but you may not be paid the whole loss that you've sustained. So you need to work that out. And that's the importance of making sure the trigger is as close to, as a proxy to the actual loss sustained.